Hey guys, we are back in Southern California. Didn't know I was looking there for a second. We are back home and working and getting over some jet lag and jet flu and all that other kind of stuff. But it's been a good morning. It's been a good couple of days. Chops were great yesterday. Sort of a quiet day today, but we've had lots and lots of good trading opportunities over the course of the session. The key has been you have to wait for them to come to you. So I was talking to Eric in the room a little bit ago. He was just saying that he's got record keeping issues on some of these things where it's harder to figure out sort of what you just did and keep things organized. I'm going to say this little thing right here, if I can reach it, is fantastic. This is Tavares told us about this, Steve Tavares, and we've been using it ever since. A couple of years. It's just a nice way to journal things, keep notes. You don't really have to keep it super organized because it organizes things for you. It's very easy to offload it then into spreadsheets and all that kind of stuff. I like it a lot, so that's just my 2 cents kind of a thing. We are working with QQQ and NQ and the Magnificent 7 today. So I wanted to go and dive into those and talk about sort of waiting for the opportunity to come to you and setting up the trades that are really the best trades and avoiding the rest. So let's have a look at the charts. Here we go. You see it here. There's the QQQ. And really, if you're looking at this and you're trying to figure out what happened, say, vis-a-vis yesterday's price action, the real zone that you'd be looking at this morning, since we're under this pivot, right? We've been trading underneath here all day long. So what I want to do is focus on that same region from yesterday's trading. And one of the things that I notice is right here, right here, right here. We had these places that we really had very firm inflections. And if you look at today's trading, right here and right up here, you had good opportunities for just picking up the exact same magnitude of a move and sort of the exact same trade again. And it really works, right? It worked out very, very well. And as far as establishing targets, what you want to do is then go through and make sure that you're looking at areas that are confluent. So when price was coming down from here, it's very easy to say, well, I want to hit that 480.35 line, on the NQ, on the QQQ, whatever way it is that you're setting this thing up. Well, when it comes down there, one of the things that helps you establish whether or not that's going to be a good target is, what's going on right here with this 2SD volatility band measure. So we're looking at two standard deviations, and one of the things that we see is, well, it's sloping down. So this and this are moving lower as price is coming back down and settling on that band. So that tells us that, if there's a likelihood for an extension during the session, that's probably the best time to be looking for it because price is moving lower and volatility is expanding. Then we also have this area. So we've got the volume weighted average price we can look at. We could say, look, that's going to be a gravity point. And that gravity point overlaps with this guy right down here, which was a target on a move lower earlier, this right here. So there was a lot of stuff that went on right in that area that says that's going to be a place that price is going to inflect. So do we necessarily, well, of course we always want to be able to pick up the bigger target, but do we necessarily assume that it's a good idea to look for it, or is the better idea just to go and bracket up the trade? So I err on the side of saying I'd like to bracket up the trade, and you just have to make a decision ahead of time and then deal with the decision, deal with the consequences of the decision. It's you've gone and chosen to do something, and you just go and let it play out the way that you intended to do the trade. Here we've got the Magnificent 7. And, one more time, it's about whether or not you're seeing things that line up with things that you saw previously. So look at Apple, for example. Apple, early in the session, we had this really firm level of support, lines up with this level of support, gave us that overhead at 210.49. Nice little, 45-cent trade per share on Apple. $200 stock. It's starting to get a little bit of range on it again as it gets a little bit more expensive. Microsoft, we've been talking about that in the room for the last half hour or so. As it came down, retested the low of this range, we have been looking over here for the long side entries. Hasn't been quite making it up to the profit objective. And, you know, the stop out on this is going to be down below the tails, below those lows. But again, the important thing is you're letting these things play out the way that you're designing the trades. You're going through, you're figuring out the logic. You're saying, look, if Netflix comes and gets back down into here, then what I'm going to do is buy the stock. And as a matter of fact, you know, we did it twice here in the room today. We were talking about this 2 times. It came down, hit the line, reversed higher, hit the target, came down, hit the line, reversed higher, and hit the target. So that's a $1 move every time that it happens. And it's your reward for being patient and waiting for price to come to you. Right now we've got NVIDIA. NVIDIA's moved all this way back down again into the earlier part of the range. I don't know that I love it here. You know, as just a quick sort of a scalp, it's from 126, I guess 66 or 61 up to 126.97. That's going to be the first resistance it runs into. That's a little bit tight. So it's okay to just pass on these trades, right? You don't have to jump on every single trade that hops up in front of you. What you need to do is just filter these and figure out which ones are going to be the ones that you're happiest getting in front of and which ones are going to be the ones that you think represent the best profit opportunity. So I think that, you know, if you're looking at these, just keep focused on, they're in the box. They're obviously trading sideways. They're obviously trading the way that we like to see them trade. Meta, you know, if it comes back up into 496.62, I'm going to look at this one as a potential short from this threshold level right here. You got a ton of support right there. It became resistance. Price moved back down again. And, you know, if we can get a repeat performance of that, I think we've got some good opportunity on the short side of that. And other than that, let's just focus on what's going on across the 7 while they're in the box. And when they get out of the box, go do something else. Just focus on these trades while these trades are right in front of you and making sense. All right, so I think that is going to wrap it up for me for today. If you have any questions, you can shoot me an email, adrian@traderinsight.com, or talk to me in the room. That's even better yet. Just pop those questions up in there and we can review some more of these trades. I think these have been spot on today, and the key again is waiting for the trade to come to you. Don't force it. It's not going to do you any good anyways. Doesn't care what you want it to do. It's going to do what it does based on those volatility bands that you can identify earlier in the session and then trade through for the rest of the day. Okay, have a great weekend, and I will see everybody back here on Monday.